All right. Good morning, everybody. Kind of a quiet day to start the week. 11 o'clock is going to be one of the big ones. NY Fed inflation expectations, and we do have additional auctions today as well. The additional auctions are at 11:30 and 1 o'clock. All right, so we're looking at the June 14 numbers here. We got the FOMC meeting this week on Wednesday, and at the moment, they're pricing in a pause. The Fed's calling it a skip just because if they call it a pause, it'll have some connotations or some weight behind it, right? Just the word pause carries with it a lot of baggage. So they're trying to come up with a different way to say that, and they came up with skip. It means the same thing, just that they're going to stop doing what they were doing. But the word skip doesn't have that baggage with it. So 73% chance that they skip. That's the expectations. We can be watching for this to change today, but if it was going to change drastically and start pointing in the other direction, it would take a lot of repricing. So it's unlikely that that's going to happen at this point. We'll probably just see it continue to rise, get into the 80s and 90s. It is worth interesting to note how low the number is so close to the FOMC event. Generally, at this point, the Fed has done a better job of telegraphing their move, and the market takes them for their word. Here, they're just not taking the Fed at their word. Generally, on an FOMC week, Monday and Tuesday are these calms before the storm, right? It's anticipated to be sideways, a lot of choppiness, not really going anywhere. And in those kind of environments, we would want to sell into strength and buy into weakness. That's generally what we would do. I would caution against that, however, right? If we were just leaning on a default, I wouldn't try to do that. So I'm loading up the trading ticks on another screen and bring it back over. This will be a week where you really want to keep track of, say, Tier 1 Alpha and their emails. Because for Monday and Tuesday, and for maybe even a little bit on Wednesday, the options flows and flows from CTAs and rebalancing, those things could take control right now with the anticipated lack of participation from the rest of the market. They can take advantage of that. So rather than having this calm where we would play the range, put on iron condors and trade the edges for reversals, we could just expand and drive drastically to the upside. All right, I got it loaded. Okay, this is 5 days of options premium. Get rid of the white line. The white line is SPY. We can get rid of these GEX levels and support and resistance levels. All right, so all of the calls in the marketplace are there in green. If there was more selling than buying, that green would be going to the downside, but there's more buying than selling, so it's going to the upside. And then in red, we have puts, same thing. If there were more put sellers than put buyers, that would be pointing down. If there's the opposite, then it'll be pointing up. And you can see a little bit of a rollover. And in this context, that rollover doesn't look that bad. But if you take those calls off, then we got this double top and it's starting to roll over a bit more, right? We kind of, when we compare it to the volume and flow of calls, it doesn't look so bad. But when we just look at it all by itself, it looks a little worse. All right, so the idea is that it's just very, very extreme right now. The push and the flow, it's right now at this point, retail's jumped on the bandwagon and they came in with both feet. Pre-COVID, if somebody had said that retail was moving the market, they would have been laughed out of town. Since COVID, people's had to change their tune a little bit, and retail's got a lot more push than it used to have, mainly because they're able to, we are able to communicate and share information and get information better now than ever before. And so when something gets hit, like the carrying call goes out and everybody's hitting the same thing. So I'll wrap that up with that was a long way to get to the point. And the point is, if we break out, like this big gap up is not a breakout, right? It's just a gap up. We haven't even come into the open yet to see if we're going to come down and close that gap. And this is more of, all right, the contract change event than anything else. The markets could very well not pause this week, right? Like that Monday, Tuesday pause. All right, so if we use the contract change adjustment, now we can see, right, no big gap. It's important to realize that that gap isn't truly there, right? We went from one contract to another contract. And you can see the difference between these two values, 43.16 versus 43.60. And the next series out for December is trading at 4,400. So, you know, if we tried to swap to that, there would suddenly be another 40-point gap. We do have a market maker move. I think a little bit of that is just the market getting confused, right? These tools, they're not perfect. They do make mistakes. So the market maker move, maybe kind of want to just take it with a little bit of grain of salt, right? The volume is well within lines, nothing out of bounds there. if we are going to continue to expand, then Friday's high is the line in the sand that we want to get through, right? We want an inside day breakout. And unfortunately, it's a really wide candle, right? Being inside day on a really wide candle isn't really ideal. I was kind of hoping for a little bit of a gap down this morning so that we would have this evening star reversal set up. And so far, we don't have it. We are outside of the box, but so far it hasn't proven itself, and it needs to keep it. That would be 43, 42, 75. All right, so we're inside week, we're inside day. We've got a really big event this week with FOMC. And while the general consensus would be a boring, sleepy Monday and Tuesday where we trade the edges, if we break out of this Friday range and start driving to the upside or the downside, I won't take that off the table. It's just least likely. Then prepare for a ripper, right? Because we could very easily get to 44.25 to 44.50 before FOMC. It's not my base case argument, by the way. I think we stay the course and perform a little bit of a megaphone pattern. That's really what my expectation is. But I'm going to be prepared to take it on a run if we do happen to break out and stick that landing and keep going. All right, US dollar China, we're trying to get out of this range here that we've been in. It tried, it's already pulled back. It seems like they're defending that 7.16 pretty well. Thing is, it's been trying to get through this area for 4 days now. So I want to watch this. If we actually do get above that 7.16, we could move relatively quick up to that 7.2. I think that kind of a move would reverberate through the market today. So watch for this breakout. It already tried it once and came back in. I think if it does it again today, it might hold. All right, US dollar Japan. We still have this rising wedge. Rising wedges break to the downside, but this is a daily rising wedge, so it could take weeks to unfold. This also has been trading in the range for longer than a week, all inside of this candle from Friday the 2nd. It needs to get out of that candle. If we were to bring things forward and use Thursday the 8th, then we've been inside of that Friday and then now today. So either way, we're IX10. We got to get out of this zone. And right now we're basically in the middle of it. So there's really no threat here until it can get to the edge, either of Friday the 2nd, which I'm using that one, or something a little closer, maybe the 8th. It's got to get out of this zone. And until it does, things like gold, silver, miners, you're just not going to get that kind of follow through that you're looking for, long or short, right? This stalls, they stall. So we got to get some movement. All right, I'm used to using CL, but we can use WTI crude. It doesn't matter, right? Keep the shape of this kind of sitting in your mind, and then look at this. Oops, not Colgate. There you go. Same thing, right? So CL crude. We're stalled out here. Pretty good size reversal from back on the 31st and the 1st, like a 2-bar reversal. Nothing compared to this pin bar back here on the 4th of May. Either way, we're tightly wound and we're threatening this low. Lots of defense so far, all the way through March, basically this year, right? If we were to kind of wind it back to 2023, when we've gotten anywhere near that $65 to $70 range, there's been a lot of defense. And even say before we get there, we see the defense started. So I don't expect energy to get below that 65. I don't even think it's going to get to 65. But if it does, expect another kind of pin bar reversal like we had here, or some long wicks like we had back here. The idea is that we're very likely going to stick the landing and keep the range, right? So somewhere from around 70 back into the 80s. There's no expectation of breaking out through those 80s anytime soon. But getting back up to them would kind of make sense. There's no signal of a reversal yet. If you are looking for, some kind of reversal signal, you've got a really nice TRB setting up on the 1 hour, or you could use something like a 15-minute crossover, right? That's also setting up for a TRB or even a failed flag. All right, for it to be a failed flag, it's going to have to get through that 786, which gets us a little closer to that 50 line than is worth, right? When I mentioned a 15-minute cross earlier, that's what I was referring to, a 15-minute crossover of the 50. They're so close together, or at least they will be by the time price moves a few more times and the 50 gets printed a few more candles. There's a lot of room back up into the 80s, so there's no reason to jump the gun on this reversal. The reversal doesn't have to start this morning either, right? It could take another day or two before this begins to turn around and head back up the other way. As a swing, it took nearly a month to complete this last leg to the downside. And now we've been kind of chopping around. We failed to get back up there on the run back up. So it could take a month at least to get back up there, right? Maybe 2. No rush. But I would be looking at some crude plays, maybe USO or something like that for a long opportunity. All right, we talked about a TRB setting up in Europe. We don't have it yet. We're still inside day. We're still resting on that 50. The defense, which started last week on Monday, is still in play. We don't have any follow through here yet, but this is primed up, ready to go. We don't have to guess or assume which direction it's going to go. All we got to do is play it. I would recommend playing it early. Right. So if you think it's going to go long, buy it along these lows. If you think it's going to go short, try to catch it across these highs if you get another chance. Right. So sell into strength or buy into weakness. That'll give you an earlier entry. Having said that, it is a TRP setup. So the expectation is a little bit like the strat with their machine gun pivot reversal play. I didn't give it that name, right? That's just what it is. I'd have called it something a little shorter. The idea, though, with the strat is if all these stops get triggered above these short days, then a breakout triggers into stops, which adds to buying, right? Because short traders have to buy to close. That drives us up to the next level of stops, which adds to the buying, and then we drive up to the next level of stops. These are grouped in clusters rather than more of what we're used to, right? With each one of the wicks being its own, like a daisy chain. But it's still there, right? The potential is still there for that kind of setup. I'd like the TRB better. 76.55 breakout, and then the target is back to these highs. Won't happen in a day, but it certainly could, right? That's why the TRB is so good. Either way, right now we've got nothing. We've got this little indecision candle. You got to zoom in just to see the poor little thing. So we need to get out of this box. We need to get out of yesterday's price. And it is a weekly, so we got to get out of last week's price. Bring it over onto the daily. You can see it's not much help. We still got to get out of this box. And it's going to start with getting out of Friday's level. All right, we're getting a little excitement in the dollar since around 6 a.m., 5:36. This start of a turnaround, but it really at this point, it's just getting back to where it was before the kill zone. Right, so between 2 and 4 a.m. we get the kill zone, and then a lot of times the market just spends the rest of the morning trying to unwind or undo that kill zone move. The main thing with the dollar at this point is we really don't want to see exaggerated moves. We've got a pretty solid top at 105 and a pretty solid bottom at 101 or 100.5. And until something significantly changes, I don't think we've got a lot to worry about here with the dollar. We got to get out of this box. Now, the thing is, if we try to zoom it in and kind of bring it a little closer, we've already tried an inside day that failed. And in fact, we tried an inside day breakout from both sides. So we've got an expansion bar here, an engulfing bar on each side of this Friday's price action. So something's got to give. And the concern is that when it finally does go, it's going to expand pretty fast. And we don't want the dollar moving quick, up or down. All right, so TLT, I think the range is pretty clear at this point. We're just holding in this zone. And something's got to give, right? We got to get out of this to really get going. If we take that perspective over to ZB, we're still inside this really big candle. Using OCR analysis, we do have higher lows, equal highs. So we're forming a bit of a wedge here. But we've got to get out, right? We got to get out of, at this point, two different inside bars, Wednesday and Thursday. And now Friday. Each one of these bars is getting smaller and smaller. Classic IX10. Being inside of Wednesday's bar, it's so big, who cares? Same thing with Thursday. That's still really big. Who cares? But Friday's bar, that's a really small bar. And now we're inside of that. So now the compression is really starting to wind up. All right, looking at the 10-year, we got nothing at this point this morning. So a little calm before the storm. This might be a pretty boring week after all, or at least the first part of it. All right, 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We talked about last Friday how we were going to lose the data from down here if we didn't revisit that level, and that it was very likely we weren't going to. So as the day wears on today, our new low is going to be that 42.11. And by the end of today, it'll be that 42.20 area. So we're going to lose that cog line from down there as well. That's going to be a pretty narrow range. A 10-day volume profile spanning from 42.20 to 43.70. That's 150 points for a 10-day range. That's pretty tight. It's been a while since we've had that. The air pocket still continues. We're nowhere near it at this point, holding above the point of control. They're so tightly meshed that you can't even see the difference between the TPO point of control and the volume profile point of control, because we spent more time there than anywhere else, and we've got more volume there than anywhere else. I wouldn't expect it to be support, but I would expect that if we revisit that area, that it gets some activity, right? So a first touch play at least. And that's if we break to the downside. All right, we got a VPOC from Friday. And it very nearly got hit earlier this morning, but you know, close don't count, hand grenades and horseshoes. $43.50 and a tick. Again, those aren't support and resistance. So, you know, if we come down into that level, the expectation is that we're going to interact with liquidity, which resides on the other side of the pivot. Could get a first touch play, but otherwise we want to anticipate that there's a reaction here. All right, the size of the box this week is just a little bit bigger than last week's. You can see this gap up here. This is how much more volatility they priced in. So not a significant amount, right? There's the old box. There's the new box. So this week, the high side of the week is 4,400 and the low side is 4,300. We'll just round up, right? So you're talking 3 points on the downside. So from 43 to 44, a 100-point box all the way around. And it's very likely that we stay inside of that zone for at least Monday and Tuesday. By Wednesday, since we're going to get FOMC on Wednesday, and that's very likely where things get a little juicy, then we could, you know, potentially begin to expand at that point. The thing is, we might get a play out of that, right? If you have the expectation that the S&P is going to stay inside this box for Monday, Tuesday, you can use 0-day trades. Now, interestingly enough, on the SPX, it looks like the box is smaller, not bigger. So there's last week's box. And this is this week's box. It's smaller. I don't know what I don't like it. Maybe I have a log. Nope, I'm not in a log chart. Still a 100-point range from 47.50 to 43.50. All right, so there's a $5 wide iron condor, $2 in credit. So you're risking 3 to make 2. The market's not open, so these values aren't going to be overly helpful, but they're a ballpark. On the option selling side of the business, having a inappropriate risk to reward is common based on the premise that it has such a high win rate, right? Or that we know our win rate. I'd like to see how it prices as we come into the open, but if it's offering these kind of numbers, and still having that wide or that far outside the boundaries of this gray area, I'm very likely going to take it if I can get $2 for that. I just don't think I'm going to get it, right? Once the market opens, those options are going to rebalance. And I think this is very likely going to end up being much closer to $1, not 2. This is a 2-day, right? It's to expire on the 14th. You would want to close it before that. You don't want to hold it into Wednesday. The other thing is, if you're looking to play this anticipation that we could move, right? Even though we're all expecting range for Monday and Tuesday, that's if you were to go counter trend or go against the consensus, then 43.50 and 42.50 would be really great areas for butterflies. Butterflies are really cheap in the grand scheme of things, considering the amount of payout that you get. So these have a amazing risk to reward. Unfortunately, they have a very low win rate. So when you're going to do butterflies, you want to try to do them when you have some edge so you can increase that win rate. This is strictly like a lottery ticket play, right? We don't have any expectation the market's going to expand before the FOMC on Wednesday. But because everybody says, oh, it probably won't expand before Wednesday, that has the potential to expand before Wednesday, right? A little bit of reverse market logic. If everybody's looking for the really big move, we don't get a really big move because everybody hedges against it. But when everybody says, oh, no, we're not going to move, we're just going to chop and hold the line, and that's when we can get these really big expansions because traders are caught off sides. So a butterfly, really cheap. It's $10. If it doesn't work, you're out, $10, 2 coffees at McDonald's. And if it does work, remember, you don't even have to hit it. It's just got to move in the right direction. It offers the potential of around $470. Now, I always say you're not going to get max profit in these, right? Even to price max profit is just unrealistic. But you could at least get half of that. And just to use some round numbers, if it says we could make $500 I'd say you could make 250 easy. 250 would mean we see price get above 43, 47, right? But the size of this box is $10 wide from 43.45 to 43.55. That's a pretty good size box. You land anywhere in there, you're going to make some money. If you even just start moving in the right direction really fast, if the S&P starts ripping to the upside quickly, this thing will start to monetize. And that's because the SPX rate of change in its options are greater than nearly any other market, especially consistently, right? We can randomly from time to time see options move faster than the SPX, but usually because it's a UOA event and they're getting targeted. This thing just has a high ROC on its options on a day-to-day basis. Someone posted in the Discord about Tesla being the world's greatest short right now in size, right? Like it already was before this last expansion, and now it's even more. This thing apparently is everybody's looking for this to go down. So a little bit of market logic again. If everybody is saying it's going to go down, it probably isn't going to go down. So you got to wait for that to end, right? It's as long as everybody's getting squeezed and those shorts keep buying to cover, then this thing's just going to keep right on going. So it will be a short eventually, but I would say wait for the signal. When this does become a short, it's got a long way to fall, right? So there's no reason to get in a hurry, jump the gun, try to get a play out of this thing before it's even offered a short. There's no reason to assume that it's topped out yet and that it's heading to the downside. All you have to do is wait for it to turn around and start heading to the downside. We are up again this morning, sitting at around 247 and 3/4, and we closed at 244.5. So this is a gapped up morning on a gapped up Monday, so a gapped up week. And generally my rule of thumb is if we gap up on Monday, it's bearish to me, right? I carry a more bearish bias if we gap up on a Monday versus gapping down on a Monday, I'd be more bearish. I'd be more bullish, excuse me, misspoke. So with that in mind, just because we've gapped up, I do have a little more bearish bias this morning, but again, it's not a short. We don't have a signal to short this. The only signal we have so far is to go long, but they call it an unrealistic or an inappropriate. That's the right word. It's an inappropriate long at this point. There's no risk to reward skew that makes sense to go long Tesla from here. And yet we don't have a signal to short it from here. So that leaves you standing on the sidelines. And like we've talked about before in the psychology books, they made it really clear people would rather try and lose than to stand aside and not try at all. Blows my mind, but that's what the science shows, right? The pain of sitting out apparently is greater than the pain of taking the trade and having lost. So there's going to be people that are yet still trying to take this thing long or short. If you are looking for a short signal, then breaking back down inside of last week's price. Well, we haven't even got out of that yet, huh? We're still at 247. So 50% of last week's range, 232.48. That's a good start. I mean, it's not not as high conviction as I would like, but it will get the job done. So if you're looking for a short, we at least need to break that level, right? And you could start with a trigger, depending on, the time frame that you want to trade. 244.5. That would be Friday's close. So maybe a small position when we get below 244.5, and then you could look to increase the position as we get that gap closed from Thursday to Friday, and then increase the position again if we can get below 232.5, right? And then you'd be full position by the time we get below 212.5. It's not my base case argument, though. I really don't. I don't have much of a insight on Tesla, but it seems like this 265 really wants to get hit that big gap here. All right, Meta, Facebook, closed basically at 265, and this morning it's at 266. It's still inside day, be day 3, well, day 2 inside of this day here from the 8th. So we're going to be getting into IX10. It's a pretty decent wedge that we've got. So a break above 267.75 offers that 270 and then 272. The thing is, I'd be looking for that Busby at 270. It's a pretty good size range from 270 to 260. We're basically in the middle of it. So a smaller range or a smaller duration is breaking back above the 8th, right? Get above 267, and you got to run to 270. Above 270, then we can target that 275. And then breaking the wedge to the downside offers you the bottom of the wedge, 261, call it 262, right? Yeah, 262. Just a little bit of caution, right? You don't have to assume which way it's going to go. Just let it offer you the play. All right, Apple above 182 offers 184.5. We can get a retest of this high. Otherwise, A break back inside of 180.5 offers that 177 again. And we are gapped up just a little bit this morning in Apple. If you look at it on the weekly chart, we've got this evening star reversal, right? Yeah, you like it. So if it was a gapped down evening star reversal, we'd like it more. It's not. It's going to be opening as a gapped up, but this is a weekly, right? So right now, Apple's right where it opened on Friday. It's retraced that much, but that's not enough. So an expansion here, like I was saying, we're going to target this high from back here. It's 185, but we'd have to get there, right? A little bit at a time. That gap isn't closed either, by the way. From Thursday to Friday. Yeah, it's not closed. All right, Bitcoin is down 1.7%, or BITO, not Bitcoin itself, but with Bitcoin down, the proxies should be down. Energy's down 1%. The 10-year also is down. And things that are up, airlines still, gold, bonds, tech, semis. So semiconductors are pretty high up on that list. And not quite up enough, but they're on their way. KWEB. So the China ADRs, those China constituents, they're not up enough, but JD, PDD, Baba, Baidu, maybe Neo, those China ADRs, they're getting a little bit of love this morning. They just didn't have enough yet to move KWEB. Right, my benchmark is 0.5%. We don't have that. But we could also check something like EEM. If we're looking for emerging markets, and China is still considered an emerging market with all of the benefits that go with that designation, which is inappropriate and unrealistic, but whatever, then we'd want to see EEM or KWEB moving, right? Sometimes you get both or just one or the other. We need more out of this. So far, nothing really standing out in those ADRs. It's from the EVs, right? So Neo, maybe Li Auto. Nope, definitely not Li. Neo's not enough. It's got to be more than that. Still, either way you cut it. KWEB is up a little bit this morning. Keep your eye on this. If it starts to expand and gets this breakout inside a week breakout, then we could see a lot of other names catch flow, right? And we do have a rising wedge here, so it's supposed to break to the downside, but rising wedges can first trap, right? So kind of get, say, yeah, I got a wedge like that. Price will often do a little trickery first, break to the upside, trap a lot of bulls, and then go to the downside. Right? We'll get that blow off top sweep first. It's not a very big one. It's only a 2 or 3 days. And if we do get one, then we're just looking at coming back to 27 anyways. But still, it would blow off top first, right? So you'd be looking at 28.5, maybe 29 first before the reversal, and then try to get the wedge completed. There's a lot of people who don't trade FOMC week. This is the week that they take a break, they go on vacation, they time events with their family, knowing that it's an FOMC week and that it's likely going to be trash and it's not the kind of trading that they want, and they just don't mess with it. I'm not that way, but a good week as a day trader, at least the first part of the week, is very likely going to be difficult and hard. So if you're already losing more often than you win, if you already find trading difficult, consider standing aside, doing something else this week, at least until FOMC, but really for the whole week. Stay in paper or, trade a higher time frame, swings and, long-term trades. Nothing wrong with doing those. But as a day trader, the warning should be heard, right? It's very likely going to be a hard week to trade. So if you're already struggling, it's something to keep in mind. Everybody be careful, be safe. I'll see you all tomorrow.